Now I am going to revise, that is, accounts from incomplete record. That is called single entry system. Its another name is single entry system. So what is single entry system? Single entry system is a system where we record all the transactions, not like double entry system. In double entry, there is a personal, impersonal account. Already you know. There is a personal account, there is an impersonal account. Impersonal account, there is a real account and nominal account. But here we only maintain personal account. It's not maintain impersonal account, or you can say real and nominal account. So before invention of double entry system, there was single entry system. Earlier the business was not that concept, global business and huge giant business. Nowadays it's a giant business concept. Big companies, one Amazon company in the world based from US, it is totally cover the whole world. Amazon is everywhere. So that types of company was not earlier. Very small companies, a small businessman, they have doing the business and they want to know the profit or loss of the business. So simply they just see what is my beginning capital. Say beginning my bank, I started a business, my beginning opening capital is, that is 10 lakhs. End of the year, when I saw what is my closing capital, it's suppose 15 lakhs. So I just understand that 5 lakhs is addition in my capital. It is due to profit. So they calculate profit on the basis of capital. They not prepare detail of real and nominal account, whatever we prepare in double entry system. They just prepare in a book, in a diary, they just recorded purchase, sale, everything, capitals, and just they find their profit different of capital and they find the profit. So that's why its name is single entry system. And on that time it is good. Before invention of double entry system, single entry system is opted by everyone. So after invention of double entry system by Nicco Paserio, or Italian person I already told you, this system become accounts from incomplete record. Why? Because under this system, real and nominal account is not prepared. It's incomplete. Under this system, there is no journal entry. Under this system, there is no ledger account. You are unable to prepare the trial balance. So that's why it is called single entry system. And nowadays, this system is legally not valid. When you produce the books and account for law purpose, it's not valid because double entry system, according to the company's law also, if you are doing some companies, you must prepare double entry system. Even you are a sole trader, a small business, you are keeping single entry. If you want to take loan from some financial institution, that financial institution demand you give me 3-year financial statement, last 3 years and projected 6 months. Still you are keeping single entry, but your accountant prepare as a double entry. That is called single entry system converted into double entry system. So this chapter have a two part. One is simple single entry system, how to calculate profit. How to profit. And the second part is single entry system. Converted into double entry system. This is not in your syllabus. Earlier it was. So you have a very simple, that is how to calculate profit. So this is the philosophy. Calculation of profit, you prepare a statement of calculation of profit. The statement of profit oblique loss. So there is a formula, very easy formula, wait, that is based on capital. That is capital at the end of the year. What is closing capital? That is called closing capital. May we say 2 lakhs? Plus drawing during the year. Whatever you draw for personal use, either drawing is in cash or draw goods or your household expense. They all are treated as a drawing. Already studies in financial statement. Drawing means not only cash, is proprietor withdraw money from business and use personally, that is drawing. Or some money just taken from business, used for some household expense, or some goods taken from business, used for their personal purpose, that is drawing. Suppose in a building they are doing a business and half part they are living and whole building rent, half rent is considered as a drawing. So drawing in cash, drawing of goods for personal use, business goods used for personal purpose, that is drawing. And also if rent or insurance premium, suppose I am a proprietor, I am paying insurance premium, but that premium, life insurance premium, that premium paying from business money, that is also treated as a drawing. So here student confused, you just only, not only cash is a drawing, it's just money withdraw, that is drawing. Now goods withdraw for personal use is a drawing. Any household expense, that is house rent paid by the business, it is drawing. Life insurance premium paid by the business, it is also considered as a drawing. So add drawing during the year. Suppose during the year withdraw 50,000. So it's a 2 lakhs 50,000 minus additional capital. Additional capital means those capital which is introduced during the year, if it is needed. They introduce, proprietor introduce additional capital. So it will be subtract, suppose 20,000 additional capital. Then it's become actual capital. Actual capital during the year. Actual capital during the year. Then you subtract opening capital or capital at the beginning of the year. Either it is given and you need to calculate, Suppose opening capital is 1,80,000. So it's the 50,000 is the difference. This is called profit. That's it. This is the formula. In some question, you have to subtract depreciation, bad debt if it is given in adjustment, depreciation on assets, interest on capitals. So you just subtract less adjustment. That is interest on capital, bad debt, provision for bad debt, outstanding expenses. If it is prepaid, then add it like financial statement, already you know. Then you get net profit. If not it is given, depreciation and all, that is some question it is not given, that is your answer. So here what we conclude? So we conclude that is this capital and this capital must be given in the question, or if it is not given, sometime it is not given. No? This is not given, this is also not given in your questions. Detail is given, detailed assets and liability is given. So what to do? You prepare a account. That account name is Statement of Affairs, which is already you know it is like a balance sheet but not a balance sheet. It is prepared like a balance sheet but not a balance. It's not a balance sheet, because in balance sheet we recorded all assets and liabilities and it is tally both sides automatically. Here something is missing. That capital is missing. So for that you need to prepare a statement of affairs. So I am drawing the format of a statement of affairs. You draw two columns. Maybe here is opening, here is closing. Suppose 2020, 2021. Here is assets. Opening, closing, liabilities. So suppose Sunday creditor is given in your question. All of you know Sunday creditor recorded here in liability side. Bills payable is given in the question. Bills payable recorded in liability side. Bank overdraft is given. Outstanding expenses is given. Bank loan is given. Or any liability, because you have a knowledge of liability, just you finish the financial statement. So you have a good knowledge of what is liability, what is assets. Here we record all assets, maybe plant and machinery. Opening record in opening side, closing record in closing side. Land and building. Furniture and fixtures, furniture and fittings, fixtures, whatever. Then investment. Then closing stock. Opening a stock will be in opening side, closing side. Cash in hand. Cash. cash at bank or any assets you have. You just recorded here. Any asset, this is here. There is a lot of list of assets you know very well. So here is greater, here is some balance. So that balance is called capital. And after then, because you know this capital, opening capital, you know closing capital, then put on this formula. Then you get the profit. If in adjustment, depreciation, bad debt and some adjustment is given like financial statement, you just subtract. And when the question is asking prepare final statement of affairs, so like a balance sheet you prepare final statement of affairs, only closing. So just all assets minus the adjustment, suppose plant and machinery, depreciation was there, so depreciation you just subtract. The final statement, you already know the capital. Opening capital, the opening capital, add drawing, get additional capital, add profit. Then we make it out and all liability, then final statement of affair is also, sometimes question is asked, you calculate profit and prepare final statement of affair, financial statement of affair. Final, after calculating the profit. So like a balance sheet you prepare, but name is statement of affair, closing statement of affair. Sometimes they ask. This is, they not ask. The question will not ask you prepare opening statement of affair and closing statement of affair. Question will ask calculate profit and prepare final statement of affair. So how you will do? So you will in working note. This is in working note. You prepare this. Because opening and closing capital is not given, you prepare this statement of affair, opening, closing, you get the capital. After then you put on that formula, the capital at the end of the year, at drawing during the year, less additional capital, you come, actual capital will come, less opening capital, profit will come. If there is a sudden adjustment, you just subtract, net profit will come. After then, you just prepare this closing statement of affair. This is all about this chapter.